Hey, I'm Jeff from the Goolsby Group at Keller Williams, and in this video, I'm gonna tell you about what's going on in the market and what you can do with this information. So whether you're looking to buy or sell, or you're just a homeowner that's looking to keep tabs on what's going on in the market and what your options are, then this video is for you. Now, in the first quarter of 2022 in Roseville, there were 489 homes to sell. The lowest price home was $180,000. That was a mobile home, about 1,100 square feet. The highest price home was a 4,000 square foot custom built home, and that one sold for $1,630,000. The average home price in the first quarter of 2022 was $670,000, and the average time that it took to sell was about 15 days. On average, homeowners sold for about 100% of their asking price, which is actually down a little bit when you compare it to last year. Some homes sold for much less, some homes sold for much more, but out of the 489 homes that sold, on average about 100% of what they're asking for. Now, what we saw in comparison from 2021 to 2022 in the first quarter was about a 4% increase in the number of homes that sold and about a 16.8% increase in the value of homes. Another notable difference from 2021 to 22 is the increase in interest rate. And we're gonna talk a lot about that in this video. The interest rate as of March 31st in 2021 was 3.084%. Now the interest rate as of March 31st in 2022 was 4.766%. What that means is if you were shopping for the average price home in 2021, you'd be spending about $570,000 on that home. If you had 20% to put down, you'd be looking at spending about $115,000 on your down payment. Now, based on the interest rate at the time and your down payment and property taxes being a little bit of a variable, you'd be likely to spend about $2,583 on your monthly mortgage. Now we fast forward to 2022. The average size home in 2022, at least in the first quarter, is around $670,000, nearly $100,000 more. Your down payment, if you put 20% down on that, would be $130,000, which is about $15,000 more in actual cash. And your interest rate, we talked about, is 4.766%, which means that your overall monthly payment is about $3,523, which means you're looking at nearly a $760 per month increase in mortgage payment for the same average size house in Roseville. That means that waiting 1 year to buy the average size home in Roseville had a cost of $15,000 in down payment and had an increase of that $760 per month. Now, some people have the means to adjust their budget and their spending habits, maybe, shrink some costs down elsewhere, and the need for their housing is worth the increase in their monthly payment, and they're just gonna deal with it and move forward. Others will have a tighter or fixed monthly budget. They might have been priced down into a different type of home or into an area or a city that maybe they weren't originally shopping in. Another way of looking at it is if we were to stick with that same original down payment of $115,000 and we stick to our same monthly budget for mortgage of about $2,500, then today's home buyer is no longer looking at a $570,000 home. Instead, in order to meet that budget, they're now searching for a $490,000 home. And unfortunately, there really aren't many of those that exist here in Roseville. So they're having to look elsewhere, or they're having to drastically modify their criteria. So what does this mean if you're planning to sell your home? You might be wondering, Jeff, I thought you said, if I'm a homeowner or a home seller, then this video is for me. Well, it is. If you're thinking to sell your home, or you're just watching from the sidelines, or you're looking to buy, then you need to understand what your options are going forward. So let's talk about if you're planning to sell your home. You'll just want to know that there's obviously been an incredible uptick in home value. Congratulations, that's the good news. There's also been a recent uptick in interest rates, and that has certainly caused and created some challenges and a little bit of a shift in the buyer pool. So for example, if your home is worth $700,000 right now, then you'll know that the buyer that's looking for your home today is not the same buyer most likely that was searching for a home in January. Most people shop near the top of their budget and commonly adjust their criteria downwards. Most people don't go too far beyond their budget because they maybe can't, because of income restrictions and things like that. If you're planning to buy and you think that waiting till things calm down or waiting for the market to drop a bit is your only option because things have just gotten way too pricey and you want to wait. You got to wait until things calm down. You'll want to consider the impact that the market conditions and interest rates will have on your purchase power later. Now, something worthwhile to ask yourself is, do you expect a substantial increase in pay later? Will you be in a better financial position later? Do you have inheritance or a large amount of income or revenue or some sort of other income stream that's coming in that might help you afford even more home or more monthly payment? Well, if that's the case, then maybe waiting won't be so bad. But all of the experts suggest that home values are going to continue to increase, and so will interest rates. So waiting out the market without a future plan of income to address those increase in prices and increase in rates and overall increase in monthly payment, that might be a very, very costly strategy. Now, if you're like most people and your income is very predictable and you're on somewhat of a fixed budget, then buying sooner than later is the ideal choice. Remember the difference in price and monthly costs from the home from 2021 to 2022? You don't want to be left behind. Now, if you're a homeowner, you're not looking to sell, you're maybe not looking to buy, you still might want to consider what your real estate investment options are. So nearly every economist predicts that the housing market will remain strong, that home values will increase, especially as the supply of homes still doesn't meet up with the demand from the population growth and home buyers. You might consider pulling a little bit of money out of your home and using that money as a down payment on an investment property. With inflation reaching an all-time high of 8%, savvy investors, institutional buyers, some of the big box hedge funds that are buying up property everywhere are relying on real estate as a hedge against the inflation. So, what are your thoughts? Are you excited that your home value is worth so much more? Are you curious to learn more? Are you excited about the market? Are you discouraged? Let me know what you're thinking. Hey, we've helped hundreds of home buyers, home sellers, our clients through various market conditions, and we're here to help you too. I'm Jeff Goolsby with the Goolsby Group. It's my mission to help people win in real estate, so please reach out to me if you have any thoughts of buying, selling, or something in between. 916-672-1030 is my number. Give me a call. We can talk real estate so I can help you win.